Hello everyone, welcome you all to the Achievers Adda. So guys, we were doing the UGC NET Commerce for the June 2023 examination, upcoming UGC NET examination. 2021, all the three shifts question papers of commerce and topic wise basis, we are discussing the previous year questions. So if you are first time and new over here in this channel, please do subscribe to this channel and press the bell icon and do hit a like button. Please share with your friends. And do not forget to join in our Telegram group, Achievers Adda AA. All the social media links are given in the description of the session. Please do follow wherever possible so that it will be easy for you to access the sessions that we are taking for free over this platform. And guys, every day 5 p.m. topic wise previous year questions of commerce and paper 1 March 2023 exam previous year question with explanation. This 9 p.m. will be at an Academy free platform. So you can just download the learning app and use my code Shiva Live to unlock the free live session. And daily at 9 p.m. in an Academy platform, 5 p.m. in the YouTube platform, the free sessions are going to be there. So for the paper 1 and paper 2 commerce. And guys, on an Academy Plus subscription, complete previous year question course of the commerce with a proper explanation of the previous year question from the 2017 till the 2023 are going to be covered from the 1st June onwards in an Academy Plus subscription. So you can enroll if you are already a Plus member. If you are not a Plus member, so there is a interesting offer is going on, that 20% discount on all an Academy Plus subscription plus 1 month extension, free extension is going to be there on UGC NET subscription. So here for the June examination or for the December examination, you can join for it. And for the June examination, there is a 1 month subscription plan is going on, which is $799 only. So you can just get that $799, which will be more easy. So use the invite code Shiva Live to unlock the 20% discount plus 1 month subscription free. And moreover, 1 month subscription at $799 only, you can able to get it by using the same code Shiva Live. So let's get into the session without leave. So today the discussion will be business finance. Previous year questions will be discussed. I'm searching your legal aspects. Okay, done. So this will be an business finance questions by 2021 3 shifts. 25th November shift 1 and shift 2 and 25th November shift 1. That is 26th November shift 1, that is shift 3 of the commerce. Question number 1. In securitization, when no assets are acquired and collateral is fixed for the life of asset, then the type of structure is called. So answer will be of option number D, that is self-liquidating structure. Answer will be self-liquidating structure. Securitization, when no assets are acquired and collateral, the collateral is fixed for the life of the asset, the type of structure is called as a self-liquidating structure. You can just look at self-liquidating structure means it occurs when a company becomes a bankrupt. When a company becomes a bankrupt and it cannot settle the debts and obligation, whatever they have to pay, they are not paying. So in that case, self-liquidation only, because when you will become insolvent, when you are not in a position to pay off your liabilities, you will become insolvent. By self, you will become insolvent. You will become unable person. So when no assets are acquired and collateral is fixed for the life of the asset, then that type is a self-liquidating structure. Means you are liquidating by yourself only. Next. Question number 2. Following are the problems that measure optimal international diversification unfavorable exchange rate movements, frictions in international markets, manipulation of security prices, unequal access to information. Guys, do hit a like button. Answer will be what? Yes, option number D is the correct answer. A, B, C, D. Following are the problems that are optimum: international diversification, unfavorable exchange rate, as well as frictions means changes. Whatever the forces in the international market, manipulation is also a dynamic process. It is a security prices. The share prices will be fluctuating in nature. Unequal access of information, because everybody is not having a equal access to all the information. Big entities are having a full access or the more access, and small entities or individuals are having a less access to all the type of information. Next. So answer for this question is D, A, B, C, E, D. First, identify the potential investments. First, identify the potential investment. Later, proposed investment. We need to gather the assemble or the proposed investment, whatever the alternatives are there. Later, decision making out of many proposals, which one we wanted to implement. Later, prepare a budget for each of the proposal. The proposal which we fixed up. Later, implementation will be a final step. This is a capital budgeting process usually. Opportunities, assembling, decision, budget, implementation, review process. Please increase your resolution and do not forget to hit a like button. Modified IRR is based on reinvestment assumption. Value additive principle is not applicable to NPV. So answer will be option C is the correct answer. Statement 1 is correct and second is wrong. Why second one is wrong? Value additive principle is not applicable to NPV is not correct, because value additive is nothing but here present value of cash inflow is there minus outflow. The leftover is an either positive or negative, plus or minus. That will be an addition or a deletion will be there. So value additive is a financial principle that says that total value of a group of assets equal to the total value of all individual assets. Combination of assets, group of assets equal to all individual assets including the group. So as per this, portfolio of total value would be summation of all the Individual portfolios put together, it will be a portfolio of total value of entire portfolio. Next, yes, NPV is based on the value additive, the cash inflow of every project. Next, by arrange the following in a logical sequence of operation of the registration of the portfolio managers. Good evening, Aarti. So answer will be C, A, D, B, C, E. So first, prior approval of the SEBI is required, because portfolio managers, they are saying portfolio, who will be maintaining that fund. Prior approval of the SEBI, portfolio managers, like, you know, like a stock broking companies, by a type of angel broking company or Zerodha. All these are like, you know, stock broking big entities. So those can be a portfolio managers. Prior approval with SEBI is required. Later, payment of the fees, and after that, adequate step for redressal of investor grievances, and after that, maintenance of specified capital adequacy requirements, abide by the regulation of the SEBI Act, because Security Exchange Board of India having rules and regulations on the capital market, which is a portfolio managers, they need to comply with it. Next, which one of the following is not one of the advantages of derivative market? Not one of the advantage of derivative market. So option number A is the given answer. Leveraging increases the risk. Not an advantage of the derivative market. Leveraging increases the risk. This is an advantage or disadvantage? By leveraging increases the risk means, leverage means itself is a risk. So if it is increasing now, that will be a disadvantage. Actually, by taking risk only, you will earn a profit. Usually, the rational investors are the people who are ready to take risk, are called as in what? Who are ready to take risk, and by taking risk only they wanted to earn. There are three type of players in the market: by hedgers, arbitragers, arbitragers are people who avoid the risk. They will avoid the risk. And hedgers are a type of a investor who will be a type of investors. He will be trying to mitigate the risk as much as possible. Mitigate means reduction of a risk. Those people. So risk, when risk increases, obviously any security or the derivative market, it will be a disadvantage position only. It will be a disadvantages. Speculators are nothing but speculators. Speculators are the ones who will be taking risk for earning a profit. These are risky people. So for them, it is derivative market is disadvantage. Speculators, derivative isn't disadvantage, but by taking that risk only, they will earn it. Next. Salman Khatun, I don't know about it, but I think there are law educators also, which you can find in the channel or in the platform. Answer will be B, that is market risk is the third one. Variation in the price sparked up due to real and social, political and economic events. And B is the fourth one, financial risk associated with the capital structure. External business risk is the second one, which is arises due to change in operating conditions caused by thrust upon the firm which are beyond the control, because external situation means beyond the control of the firm. Internal means within the environment, within the firm. The firm can conduct its operation within their control. So 4 types of risk. Didn't read the question because you are busy in gossiping now. How can you read? You are too much busy. Hello Shamalji. Next, the value of the firm in wealth maximization objective is measured by. So answer for this question will be C, present value of all expected future profit. Wealth maximization is nothing but present value of all expected future profit. Why present value of all expected future profit? Because we should value today rupee have more value than tomorrow 10 rupees. More value than tomorrow 10 rupees. Today 1 rupee value is more value than tomorrow 10 rupees. So that is why present value is considered to identify your wealth. Based on the expected future profit, present value calculation will be done. That is indication of a wealth. Time value of money will operate. Pecking order theory in finance is based on the assertion of asymmetric information between the managers and investors, symmetric information between the managers and investors, outside the information, and asymmetric information among the investors only. Do not forget to hit a like button because number of learners and the likes are not matching. Kindly look at and hit the like button. So answer will be option number A, asymmetric information between the managers and investors. So you can just see information which is available for the managers will be shared with the investors. So pecking order theory in finance is purely based on that only. How much you can go for the debt and how much you can go for this fund, or in what way. Actually pecking order means first preference of source of finance is that internal financing. Later go for the debt, second level. Third and final source of finance should be an equity finance or the external financing. So here information asymmetrically leading into an higher cost of financing from external parties. Higher cost of financing from external parties. Higher cost of financing matlab debt to equity. Here cost will be, debt cost will be more as compared to the equity. Because we need to pay regular and this is whenever the profit only we will pay for it. Next, shift number 2. What is the value of the levered firm L if it has the same EBIT as the unlevered firm U with a value of 700 lakhs and has a debt of 200 lakhs? Tax rate is 35% under the approach. Need to calculate value of the firm under the So answer will be C. How to calculate? Value of the entire firm is equal value of levered plus value of unlevered plus tax benefit. So here 700 lakhs is a unlevered firm which is given 700 lakhs and debt is 200 lakhs. Tax benefit is how much? 35% tax is given. In the question, 35% tax is given. So upon the debt component 200 lakhs, 35% is the benefit, which is 70 lakhs. So now the value of levered form is equal to value of unlevered form 70 lakhs, value of the tax savings, which will be equal to 770 lakhs, will be an value of levered form. So usually by value of levered form, value of unlevered form plus tax benefit will give you the value of the firm total. If you want to calculate either this or that, need to just pick up from here to there. It's a simplification simply. Unlevered form also, value of the value of unlevered form, if they are asking now, then you need to deduct the tax. If they are asking unlevered form, you need to deduct the tax. As they are asking levered form, you need to add the tax. The percentage of discount rate used in capital investment appraisal, which brings the cost of project and its future cash flows into equality, is what? Internal rate of return, because internal rate of return is a rate of return where present value of cash inflows is equal to present value of cash outflows. The rate at which this both are going to be equal is called as an internal rate of return, and this will be working on the principle of reinvestment assumption. Next, which of the following are the reasons for raising the funds via securitization? Via securitization, what will be the possibilities of raising the funds? So answer is that B is the correct answer, B, C, D. To accelerate the earning of financial reporting purposes, and to diversify the funding resources, and to potential for reducing the funding cost. What are the reasons for raising the funds via securitization? Securitization is process of converting illiquid into a liquid form. That is what a securitization, correct now? Illiquid into a liquid form is called as an securitization process. Now in this, accelerate the earning of financial reporting purposes as well as diversify the funding process, funding resources, and potential for reducing. Diversification means getting from the even whether it is a overseas or normal funding also you can get it. The diversification of funding means from the different sources we can take it. Potential for reducing a funding cost. Funding cost, how we can reduce, because we will issue the bonds instead of securities. Here we will issue the bonds which are underlying mortgages. Usually we'll go for the debt instrument. Underlying mortgages document will be there for this. Underlying mortgages. And to accelerate the earning of financial, securitization is a source or conventional or non-conventional. This question is also asked, I think, somewhere. Here, as this statement number 1 is removed now, it is making this as an securitization as an conventional. Securitization is making that as an conventional. Right? Because of that. So benefits of securitization, you can see liquidity, balance sheet benefit. Balance sheet benefit is nothing but reporting purposes. That is what second reporting wala. And risk management, protection of the investor, diversification. Third statement. Next. Shalini was asking that question. Which of the following is false statement? Capital market is a market for a medium and long term. GDR is a negotiable instrument issued by the US bank. Many publicly listed securities or companies in India are traded in shares through Bombay Stock Exchange or the NSE. Securities that are listed on a various stock exchanges are eligible for being traded there, called as unlisted securities. By question is asking, what are the reasons for rising funds by the securitization? By securitization, if you take this as an modern source of procuring, then why it is not a reason? Correct now? If it is a modern source, it's a new type of procuring a funding. If that be the case, then it is non-conventional also, correct na? It is to raise the capital using non-conventional also, correct. So because of that only, as the answer is not provided that one, I am saying securitization is a conventional one. Securitization is a conventional one. Based on that I am saying. Otherwise there is no information actually not available in the option. GDR is a negotiable instrument issued by the US. No, other than the US. This is European Stock Exchange. GDR's global depository receipts are traded in European stock exchanges. Capital market plays an important role in mobilizing the resources and diverting them in a productive channels. Capital market is a market where buyers and sellers engage in the trade of financial securities like bonds and issues. So answer will be A. Both the statements are correct. Capital market where buyer and seller engage in trading of financial securities, mobilizing the resource and diverting them in a productive channels. Both the statements are correct. And the annual demand of an item is 3,200. The unit cost is 6. Inventory carrying charges are 25% per annum. If the cost of procurement is 150 rupees, determine the number of orders per year. This is the EOQ question. Under root of 2 into 3,200 and ordering cost 150 rupees. Cost of one procurement is 150 rupees. Unit cost is 6 rupees. Inventory carrying cost 25%. Number of orders. So cost of one order, procurement means order. Cost of one order 150 and carrying cost per unit is that 6 rupees into 25%. That is 2 into 3,200 into 150 divided by 6 into 25 multiplied by 100. The 100 will go up. So 25 ones are 25 fours are. Right. And 2 threes are 6 and 3 fives are 50. 3 fives are 50. 32 into so 3,200 into 50. How much? 3,200 into 50. How much? Please do hit a like button. 32 into 5. One lakh 60, yeah? 64. Yeah? So how much? 16,000 means 16,000 means how much it will be? 800, is it? Answer is what? B is the correct answer. Yes, 4 4s. No. I think this, the EOQ is how much? Please tell me the EOQ. I want a EOQ. 1,60,000 by, but what will be the EOQ? What will be the EOQ? Because this will be 800. Yes, 800 will be EOQ. Number of orders they are asking. Annual requirement 3,200. Number of orders are 800 is the each order EOQ. So 2020, 8 4s are 32. So 4 orders will be there. Number of orders are 4 orders. Option B. Next, the net profits of a partnership business. Providing income tax of the last 5 years, 80,000, 1 lakh, 1 lakh 20, 125, 22 lakhs, and the capital employed in the business is 10 lakhs. Normal rate of return is 10%. The value of a goodwill on the basis of annuity method. I think this should go into the accounting chapter. So answer will be option number C is the correct answer, 94,770. So average profit, how to calculate? Total here 80, 1 lakh, 120, 125, 2 lakhs is given total. Right, total 2 lakhs, the total divided by 5 years, 1,25,000 average profit. Normal profit, capital employed 10 lakhs and 10% is the normal rate of return. So that 10 lakh into 10%, 1 lakh will be the normal profit. Difference between average and normal profit will be 25,000. Annuity method means super profit. Average and normal profit will be super profit multiplied by annuity value 3.790, which will be equal to 25,000 into 3 point something by. So 25 into 3, which will be a 75. But 3.5 something, again it is better to do 3.5 into 25. So it will be 90 plus some around. So the approximately you can get the answer, because only one option is available with a 90. Remaining all are, this is 2,579 and all are outside the 90. Next. Concentrate on the class, bhai. Concentrate. कुछ नहीं होगा. Time pass का बत्ती. Option C is the correct answer. Sir, B is the correct answer. A3. Hedgers are the one who are commercial producers, and financial derivatives in India, which is an increasing volatility. It's 2 only na given, yes. And C, arbitragers are riskless profit. Commodity of future in origin is Osaka. Commodity future in origin Osaka. Actually, this is an exceptional matching. Hedgers and arbitragers were given by. Hedgers and arbitragers were given. Hedgers are given as in commercial. Hedgers are who will be reducing a risk by incurring a cost, trying to mitigate the risk. They wanted to reduce the risk. That is what a Commercial producer means who are the original traders, who are the manufacturers. They will take less risk. They wanted to avoid the risk and they wanted to mitigate the risk. Risk avoiders are comes under here. And arbitragers are riskless profits. Riskless. And they are also called as risk avoiders. Whereas commodity feature in origin is an Osaka. I think Osaka is a place, if I am not wrong. Still, I didn't got the explanation for it. Osaka, commodity of future. Osaka is a place where the commodity market has been originated. Exceptional matching. Following is not an approach to the structure of Indian financial system. This can be a banking question also. How to get all my PYQs at Unacademy Plus. You can join and get. And that this 2021 PYQs, I am doing it. In the YouTube, you can search simply Vodnala Shivalingam 2021 Commerce previous year questions. Other 2021 paper 1 previous year questions like that. So your answer is C by. Answer is C. A brokerage can be either be full service or discount, because brokerage can be either full service or a discount. They are asking about a not an approach to a structure in Indian financial system. In brokerage, we are following in India. And the financial system is concerned about money and credit finance. Yes, we are following in India. Housing finance simply refers to providing finance for a venture capital. By housing finance and venture capital, what is the logic? Venture capital is for startups. Startup investor. Housing finance is mainly for construction as well as the purchase of the loan. Both will be there. That is not correct as in the context of it. So 26th morning shift. Next. Yes, loan for housing purpose. Correct. Sure. So answer will be D is the correct answer. How D? A3, European option is an 3. Contract exercise only on the maturity date. Only on maturity, because European options are only on the maturity date it will be there. It will be. You can exercise only on the maturity date. And option premium is the one which is paying for the advance. To exercise the option, you are paying the premium. That is paid by the buyer to exercise an upfront, like advance it will be. To exercise the advance. Next. In money option is an second one. Immediate exercise spot, whatever the positive value that we are going to. American option is an US one. It can be up to the date of maturity, any date. On the date or any date up to the maturity, you can exercise that option. Next. Yes, it is okay. You can see now, you are writing. Which one of the following is considered as a necessary precondition by Richard Rolle for markets become efficient? This is item question. Richard Rolle is there still. He's a foreign professor. So answer for this question will be D. I didn't got the explanation for this question, but chalo, it's okay to do it. Traders who makes living by beating the market through trading. Who makes a living beating the market through trading. Trading matlab by doing selling and buying activities, they are going to make their life or living, their daily living, beating the market means by doing this trading they are beating the market. Beating the market means, so if they are doing, as they are doing this buying and selling activity, then only this market beating is happening. Otherwise nothing will happen. Correct now? They are doing somebody buying, somebody selling. That is why market is getting beaten over here. As per the Richard rule, markets are becoming efficient and markets are becoming more strengthened because of the trading, and based on the trading, market is going to be beaten. So that is what his context. But that is nowhere written, from don't know from where they have taken. Two companies with the same general earning power and same general position in an industry, the one paying larger dividend will be almost always sell at a higher price. The discounted value of a near dividend is higher than the present worth of the distant dividends. So option C is the correct answer, this one. Both A and R are correct and correct explanation. Two companies, same general earning power, same general position of an industry. One is larger dividend, almost one is paying larger dividend will almost always always sell at a higher price. Who is paying more dividend, they are having a higher price of sales. The discounted value of near dividend is higher than the present worth of the distant dividends. So here answer is given as in C, because more dividend, more price, the market price will be increased due to when you are issuing a more more dividend. And discounted value of a near dividends is higher than the present worth of this statement is there. Now this statement, discounted value of near dividends, means if you reduce the discount, if you reduce the dividend to much extent, means just a small change or a small discount in the dividend will be impacting on the current year value more, that is what the context here. So because they are actually in the context of more dividend will give you more selling price. When you discount that one, it will impact on the present worth of the market price. Next question, which of the following is not a feature of Indian capital market? Co-promote state level venture funds, government rules and regulation, link between saver and investment opportunities, utilizes intermediaries. ఏంద్రా నాయనా నీ బాధ, ఎక్కడి నుంచో వస్తారు, ఏదేదో టైప్ చేస్తారు, ఇంత ఖాళీ లేకుండా ఉన్నారా జనాలు, నాకు అర్థం కాదు. యాదవాలు అనవసరంగా ఇంటర్నెట్ డేటా వేస్ట్ చేస్తారు. సైకిక్ మెంటాలిటీ ఉంటే ఎట్లా? Option A is the correct answer. Co-promote state level venture funds. Which of the following is not a feature of Indian capital market? Co-promotes the state level. There is nothing promotion of state level or any level by. So not a Indian. This is actually Indian capital market. Total national level they are asking. So where is the question of state level? Government rules and regulations, link between the savers and investment opportunities, utilize the intermediaries. That is what a capital market features also. Next. అంతసేపు చూసే బదులు సెషన్ని ఏదో ఎగ్జామ్కి ప్రిపేర్ అయినా క్వాలిఫై అవుతాడు కదా, అన్ని సెషన్లోకి వచ్చి ఈ టైప్ చేసి ఇదంతా చేసే బదులు Prepare for some exam by listening these classes or any classes wherever you are going. Option B is the given answer for this question, that is ACE. Cash flows are presumably reinvested in capital budgeting decision at discounted rate, and C, cost of capital, E, internal rate of return. And market rate and riskless rate will not be possible because inflows will be reinvested at with some cost of capital and expectation only. But here this reinvestment decision will be changing in the IRR method. In the IRR method, they will assume that it will be reinvested at IRR. Because of that only this is becoming an answer. But generally capital budgeting decision will be reinvested at either discount rate or cost of capital rate. This is possible only in case of IRR method, the internal rate of return reinvestment can be done. So that is also one of the answer. Basic premise of approach is based on which of the following? Asymmetrical information, efficient capital markets, investors' rationality, diverse business risk profile, 100% dividend payout ratio. Answer will be option C, BCE. Because approach, Modi, Gilani and Miller approach, assumptions they are asking. They are assuming that efficient capital market, and C, which is investor rationality, 100% dividend payout ratio. Diverse business risk profile means here risk is changed. When risk changes, law will fail, that theory will fail. So that is why B, C and E. Asymmetrical will not be there by because symmetrical information is going to be there, not asymmetrical. It is not based on the source of fund. So there will be a perfect capital market, no retained earnings, 100% dividend declared, no corporate taxes, 100% rational investors, dividend payout ratio 100%, business consists of the same level of risk, no risk changing. So that is giving an answer. Option A is the given answer, that is lagging. A practice of delaying receipts from the foreign currency designated receivables whose currencies are likely to appreciate and delaying foreign currency designated payables whose currencies are likely to depreciate is known as. So first delaying the receipts which are likely to appreciate, delaying the payments which are likely to depreciate. Delaying the payments which are likely to depreciate, which are likely to delay in receipt, which are to be appreciated. So that is what lagging word. Let me explain lagging by. What does this lagging means? Lagging is an assess the current state of the business where the leading indicator predict the future state of affairs. Something when you are doing ulta called as an lagging. Option sahi nahi hai. Abba, is it? This one, sahi nahi hai, matlab I thought the options are not given correct. It is correct only here, okay, I understood. So whenever receipts are coming na, if it is going to appreciate in the future, you will make the delay in receipt. You will try to make delay, lagging behind. You will intentionally do the delay if the price of this receipt is going to increase in future because you will get more in currency now. When the payment is going to make, you will make again the delay in the future if it is going to decrease. In the future if it is decreasing now, then you will make a delay because in the future you can pay at less amount. So you will wait for them to decrease the price. You will wait for the price to decrease. And here you will wait for the price to increase. Whenever the depreciation is going on for the payment, you will wait for the delay because depreciation is there, and you will delay it because in the future price is going to be appreciated, which will increase your revenue. Next, by 12.7% over the 3 years growth. Average annual increase over this period will be lagging. Lagging means delay. Remember that part. So answer will be less than 8%. Here compound annual growth EV divided by BV power 1 by n minus 1 into 100. Ending value divided by beginning value. So your annual rate of return first year 5%, second year 12%, third year 7%. So 100 plus 5% 108, 105 plus 12% 117, 117 plus 7% 125. So ending value will be 125, beginning value will be 100. So 125 divided by 100 upon 1 by 3 years minus 1 into 100, which will give you 7.90, which is less than 8%. D is the correct answer. There is a new formula and need to remember by. Please remember this one. What is the sustainable growth? What is the sustainable growth? What is the sustainable growth of the company that enjoys a return on equity equal to 30% and a dividend payout ratio 40%? Option will be B. Option will be B. Sustainable growth rate enjoys a return on equity equal to 30% and dividend payout ratio will be 40%. So, how to calculate this one by then? So total return is that 30 upon this, it is like EPS upon this 40% means how much? 12% is the dividend. 12% is the DPS, dividend payout ratio, DPR. Remaining 18% will be retained earnings. Retained earnings, how to calculate? B into R, that is growth. With B into R is nothing but a growth only. That is how the retained earnings will be calculated. Correct. Yes. Remaining will be 18%. Right. So that's how the questions, total number of questions bus by. All the business finance related to 3 shifts of commerce examination which was recently happened in the 2021, these are the business finance questions.